Well, hi guys, welcome to this Moneycontrol live stream. You're watching Earnings Express with me, Nandita Khemka. Well, today we'll be discussing the quarterly performance of Bajaj Finance and how the road is really looking like for the NBFC giant going forward. To decode the numbers and to shed light on how one should approach this talk, let me bring on board my colleague Neha Dave, who's in fact from Moneycontrol Pro, joining me this morning. Great to have you, Neha. Let me begin by asking you that there is a case of bull versus bear building up when it comes to Bajaj Finance, and CLSA has been on the bullish side when it comes to Bajaj Finance. In fact, back in April, I was reading the CLSA's report at that point of time, and it had described the stock as Kohli's aggression, or in fact described the business as something which is similar to Kohli's aggression and Dravid's defense. And that's how it had pegged its business back then. But given the fact that the company has come out with a strong quarter this time around, AUM growth has been fairly strong, even though profits have been a tad below expectations. But would you say that this quarter as well the company has displayed strength in the face of headwinds like higher cost of funds and building competition concerns?
Thanks, Nandita, for having me on the show. So for Bajaj Finance, it was yet another quarter of a very strong performance. Net profit rising by 28%, which is very good considering, it is already growing at a very fast pace. The asset growth was very robust at around 33%. So, despite some compression margins, the overall performance of Bajaj Finance was very good. Asset quality trended better. Operating expenses were contained. Credit cost inched up only slightly. So, overall, if we have to say, yeah, it was an excellent performance once again by Bajaj Finance in the quarter gone by.
All right, excellent performance coming in. But let's talk about the rural sales finance and the rural B2C business, because both these businesses have exhibited muted AUM growth because of the various corrective measures that the company had undertaken. But can we see more stress building in when it comes to these segments?
Yeah, so one has to understand the Bajaj Finance's loan book mix. It has a total AUM of around 2,90,000 crore, and one of the biggest segment, obviously, as we know, is consumer lending business. And this business is growing at a very good pace, more than 30% growth overall in consumer lending space. The second biggest component of its loan mix is mortgages, which is conducted, that business is conducted through its subsidiaries, that is Bajaj Housing Finance. That again is growing at a very good pace. So both this put together constitutes the bulk of Bajaj Finance loan book, and they are growing at a very good pace, and not much issue in both these segments. Now, rural is a small proportion of total AUM of Bajaj Finance, and management articulated that it has seen some kind of stress building up in especially the B2C segment of rural business. So it is going slow in this segment. The growth is muted. If we see the overall rural growth.
Right, I think we've lost the connection with Neha there. I think we'll try and get it back for you. But as Neha was mentioning, there is some bit of pressure when it comes to the rural end of the business. However, the consumer lending business is doing extremely well. But of course, I'll be touching base with Neha once again and asking her about the company's game plan to tackle higher competition, given the fact that the company will be raising funds. In fact, it is raising 10,000 crore rupees, 8,800 crore rupees via QIP, as well as 1,200 crore rupees via preferential issue to its parent Bajaj Finserv. So we will be, of course, checking with Neha what the management has, or whether the management has provided any color as to where the company will be deploying the capital, which growth areas will the capital raise will be used in. If you look at the stock of Bajaj Finance, of course, we can see some bit of pressure coming in, given the fact that margin pressure was already being factored in when it comes to the second quarter performance, but it has not been that much. I think 30 basis point kind of a impact was something that the street was factoring in light of higher cost of funds. But we saw a contraction of somewhere around 14 bips. So that way, margin wise, the company has done fairly okay. Margins have held up. Asset quality, that deserves mention. It has been fairly strong. Net interest income has also been pretty okay, but it's the profit growth that has come in, tad below estimates. 30% is what the street was working with, but the company has seen 28% kind of growth in profit on a YOY basis. But Neha, you were talking about in fact the strength in the consumer lending business and how rural may face some headwinds going forward. Complete your thoughts as to what you were highlighting in your last answer.
Yeah, so as far as rural is concerned, management articulated that the growth in that segment will be muted in FY24. However, if we see that it won't adversely impact the overall loan growth or the AUM growth of the company. We have seen 33% AUM growth in this quarter, and for FY24, again the AUM growth can be in the range of 29 to 31%, because consumer lending, SME space, mortgages, all other segments are doing well.
All right. Consumer lending space doing well, but of course we know that the company is raising funds somewhere around 10,000 crore rupees, partly via QIP, which is 8,800 crore rupees, and 1,200 via preferential issue to its parent Bajaj Finance, right? But of course, we know that the company is gearing up for intense competition due to entry of players like Jio Financial, which is of course looking at entering consumer lending, consumer durable lending and merchant lending as well, right? So, did the management really provide any color as to which key growth areas it aims to deploy this capital infusion? Also, since you're talking about capital raise, what are the other or previous instances when the company raised funds?
Yes, so this capital raising news in case of Bajaj Finance is a bit surprising because market was not anticipating this. The reason being the company's overall capital position and the leverage as we define as the total assets by net worth is very comfortable currently. It does not need capital as such. If you look at the past instances, management has always maintained that the time to raise capital is when their leverage inches towards 7 times. Currently, the leverage for Bajaj Finance at a consolidated level is close to 5.4 times. Now, it is in a very comfortable position. So, it was a bit surprising considering its past instances where, they tend to raise capital when gearing is around or leverage is around 7 times. So, it was surprising. But however, management said that this capital will always will be used for growth purpose. It's a subsidiary, that is Bajaj Housing Finance Limited, is growing at a good pace. As we know that this entity also might get listed in next 8 quarters or so because of the regulatory requirement. Management said that they have asked an extension from the regulator. Having said that, these funds will be deployed in both the parent company, that is Bajaj Finance, as well as Bajaj Housing Finance for growth purpose. Now, if we talk about growth, which segment is something that the management is looking at. Consumer lending obviously and mortgages are doing well. However, the management has given a long-term strategy and a plan, and it plans to enter into certain new segments like microfinance, gold financing, new car financing, and host of other segments. Now, this is going to be in a phased manner over FY24 and FY25. So obviously, this capital is likely to be deployed in growing the newer segments. Management prefers organic growth over inorganic growth. So we may not see some mergers and acquisition, in a near term. However, organically, its book will continue to grow at a faster pace because of the fundraise.
All right. Let's also talk about, the unsecured loan business. RBI, of course, we know that has flagged off risks to asset quality of lenders in the wake of a surge in unsecured loans. Of course, we know that Bajaj Finance is a key player here. Is there risk to asset quality going forward? Because in the quarter gone by, we saw very strong asset quality for Bajaj Finance.
Yes. So RBI has raised concern over the fast growth in the personal loan segment, unsecured lending over the past few quarters, in fact, couple of years. But as far as Bajaj's management continued to maintain that they are closely monitoring, and the data that is coming from the credit bureaus continues to show kind of a comfortable leverage from a borrower's perspective. So they don't see any stress getting built up in the consumer lending space as of now. Though competition is quite heated up, private banks are also are very very aggressive as far as personal lending and unsecured lending is concerned. But it does not see any imminent stress building up as of now. As far as the credit quality is concerned, we have seen that it has trended better. And management also has it has an excess provisioning, or what we call as management overlay, of around 740 crores. Now this also gives a lot of comfort in case if we see some signs of stress in unsecured lending going forward. And from a strategy perspective, we have seen that Bajaj Finance has grown its mortgages business, which is a secured lending, in the past few years, and now it has become a significant component of its total loan book. If we see the loan book mix, it has shifted. It will continue to shift from unsecured to secured in the coming years.
Right, it will shift from unsecured to secured, that's the word. But, if I may have a couple of more questions to you, may pose rather. Going forward, we saw margins come under slight pressure, but they've held up pretty strongly, right? But cost of funds will remain a problem going forward as well, right? So, can we expect further margin pressure in the next couple of quarters? And secondly, if I ask you to pinpoint a couple of levers for FY24, which would those be?
Yeah, so management has clearly indicated that the cost of funds will rise in over the next 2 quarters, and hence the margins will come under pressure. Now, obviously, the margins will come under pressure, but asset growth is going to be again very strong, going by the trend what we saw in the first half. So as far as the earnings is concerned, there will be margin pressure, but that will be kind of mitigated or offset by the operating efficiency. Now, what do I mean by operating efficiency is that if you look at how Bajaj's operating expenses have shaped up in the last couple of years. Operating expenses actually grew after the COVID, post pandemic, for Bajaj Finance, as it invested heavily in building the digital infrastructure. It has built a web platform, mobile platforms, app-based platforms. It has gone for a geographical expansion. So all this has led to higher operating expenses and a cost-to-income ratio. And this cost-to-income ratio continues to be above the pre-COVID levels. Now, since most of the expenses have already incurred and are, now as the company continues to grow its book, operating leverage will kick in, and cost-to-income ratio will decline going forward. And this is going to be the primary driver for earnings. So while margins may decline in FY24, the key driver for earnings will be operating efficiency, or operating leverage will come into play, and cost-to-income ratio will decline.
All right. Last question to you, Neha, really, with respect to, what one should be doing with the stock going forward, given the fact that, valuations are fairly rich. I think 5.8 times estimated FY25 book value. But despite high valuations, do you think this elephant can continue to dance going forward, given the fact that the share prices are up over 20% on a YTD basis? Do you think this performance can continue going forward? And, how should one approach the stock after the second quarter earnings?
Yeah, so to kind of look into the future stock performance, one has to look into the fundamentals and valuation both. Now, as far as the fundamental performance or earnings growth of the company is concerned, we have seen a very long period where Bajaj Finance has done phenomenally well. Last 15 to 16 years, its earnings have grown at more than 50% compounded annual growth rate, and its asset also at more than 30% in the last 15 years. Going forward, to maintain this kind of growth rates, where asset book continues to grow at more than 30% annually, is likely to be very difficult, especially since the competition is heightened in this segment. So management, if we go by management's long-term guidance also, it has guided that earnings growth will taper down to around 25%. The same is with the asset growth. So the company will continue to grow, but at a pace much lower as compared to its historical growth. Now, if we look at the valuation wise, the company is trading at around 5.8 times, and if we consider the fundraising which is likely to be completed in the next quarter, it will be around 5.3 times FY25 estimated book value. Now, it is at a premium to most banks and NBFCs, and this is despite that the earnings growth has come down from earlier, 35 to 40% and as management guided, it will, come down to 25% in the long term. So earnings growth has come down, and the valuation is still pretty stretched. Now, obviously, one can argue that the customer franchise or the NBFC that it has become, of the size, the kind of valuation multiple is justified because it has a cross-sell franchise of more than 50 million customers. Having said that, there are more downside risks to earnings, and that is primarily because of competition. Also, because one needs to understand that if at all Bajaj Finance goes and tries to get converted or become a bank in the future, though management has not indicated any such plans for the near term, banking license would actually lead to valuation compression in case of Bajaj Finance, because most banks are currently trading at around around 2 to 2.5 kind of a forward book multiple. So that also is a risk in case of Bajaj Finance, and incrementally, because its cost of funds continue to be more than 200 to 250 basis points over bank's cost, that could be one of the logical step of getting a banking license. So that is again a risk. So if we have to summarize as to what is to be done with this stock, so in the current last 1 month, the stock has moved up primarily on the news flow of capital raising, YTD. Hence, the YTD performance looks good. But if you look at the last 1 year performance, the stock has delivered only 10% return, and it has underperformed Nifty. Will not be surprised if the stock continues to underperform Nifty, primarily because of the stretched valuation and as because the downside risk to earnings have increased.
All right, that's the view then. Downside risks to earnings, valuations are rich, and of course, the stock has underperformed Nifty over the last 1 year or so. With that, Neha, I appreciate your, you taking out time and joining in this morning and putting into perspective and decoding the numbers in such great details. Look forward to touching base with you, when it comes to other banks like SBI and when they report their earnings.
Thanks, Nan.
Thank you. Well, with that. Finance and what the future trajectory looks like. But with that, it's a wrap from me. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates.